I'm Melody Rackley. I'm a realtor in San Antonio and surrounding areas. Today I wanted to talk to you about homebuyer assistance programs. You might have heard of these before, but they are usually a grant type program that if you qualify, you're eligible to receive funds towards closing to help with closing costs and down payment. So there are several programs available in Texas. Not all lenders offer all programs. So if you're talking with a lender who doesn't, you may only hear about the ones they offer. So we wanted to kind of outline the highlights of these, and you'll see, each one, the asterisks are the highlights of that one compared to the other programs. Those features are strong in that program. They're all great programs. Different ones work better for different situations. So I've got Crystal Villanueva. She is a loan officer. I've done some other videos with her, and so I've asked her to help kind of outline the programs and give some explanation. Hopefully this will help you see if you might be eligible for a program. Because, realistically, you could come to the closing table without cash in hand from the bank to help you get into a house, so it would be like a zero down program type thing. So let's go ahead and move forward. Thank you, Crystal.
Yes, thank you. So we lend, we give these grant programs all over the state of Texas. So that means that the first one is our TSHAC program. The maximum sales price is $301,764. On our TDHCA grant down payment assistance, there's no maximum sales price. And then on the SETH program, the max sales price is $274,050 for all government loans, and for conventional, $324,000.
Okay.
The income restrictions on TSHAC is $74,520 for combined household income. And on the TDHCA for a family of 1 to 2 family members, it's $69,619. And with 3 or more family members, $80,062. On the SETH program, the maximum income limit on a government loan is $72,910, and with the conventional loan, it's $88,760. On the TSHAC, there is no first-time home buyer requirement, so that means you can have owned in the past, and we're not going to penalize you on granting you for the down payment assistance. On the TDHCA, you have to be a first-time home buyer, including your spouse. So that is one of the stipulations to benefit from the TDHCA loan. And on the SETH, there is no first-time home buyer requirement, so you can have owned in the past and still be eligible for the grant. On the TSHAC loan, there is no repayment of the assistance. However, you have to occupy the home for at least a minimum of 1 year. On the TDHCA, there's no repayment either. However, you have to live in the house for 3 years at a minimum.
And if you don't?
And if you don't, then you will, whatever that difference is, that's the prorated amount for the time that you've lived there. We're going to include that in your payoff when you come to sell your home.
Okay.
And then on the SETH program, there's no repayment at all. So you can live in the house for 6 months, a year, and then move out and sell and not get penalized on that money that you got granted. So on the TSHAC loan, we give you assistance for closing costs and down payment in the amount of 3 to 5%. And then on the TDHCA loan, it's across the board 4% max. And then on the SETH program, it's anywhere between 1% to 6% to cover down payment and closing costs. So for instance, like on a VA loan, there's no down payment. Well, we are in a seller's market. And what that means is that there's very low inventory. So therefore the sellers want to net a certain amount and they're not willing to pay any closing costs. Well, on 100% financing, which is a VA loan, we can tack on one of these programs where we cover all of their closing costs.
Very cool.
Yes. Let's see, the minimum credit score for the TSHAC is a 620, along with TDHCA minimum credit score 620. On the SETH program, it's a little bit higher of a 640 credit score.
Okay.
All 3 programs, you have to take a mandatory home buyer course. It's an 8-hour course, and the cost for that course is anywhere between $75 and $100, and you take it online.
Okay.
On the TSHAC loan, if your credit is below 640, you're going to be charged anywhere between 1/4 to 1/2 point in origination, which is charged in your closing cost. And if your credit score is above 640, then there's no origination charged at all.
Okay.
Same thing for the TDHCA. There is no origination charge at all
For anyone.
with a minimum of 620.
Okay.
SETH charges a 1% origination, so that's,
Across
I would
the board.
say, yeah, that's the one that's a little bit costly, but the beauty about this is that you don't have to, you don't have to be a first-time home buyer.
Okay.
Let's see here. On the TSHAC, they cater to Texas heroes, and a Texas hero is anyone from a teacher to a police officer to a firefighter, EMS, a school nurse.
Veterans.
veterans, correction officers, and these people qualify for an MCC tax credit, where if you owe at the end of the year, you will benefit up to a $2,000 tax credit for the life of the loan.
Wow.
So
that is actually a separate program, the MCC, that even if you don't qualify to be eligible for this, you can still do that separately. So that's something, definitely a huge benefit, if you qualify with a career in those fields. So to go back to a couple of things, the range of the percentage for the closing costs and down payment assistance is based on credit score. Is there anything else?
It's based on credit score and and loan program.
Okay.
Yeah, so
So
sometimes
depending-
conventional is a little bit more stricter, so you can borrow less, and then the government loans, FHA, VA, you can borrow up to the 4%, 5%, and 6%.
Okay. And then the other thing on the income max limit, how do you, is the income based on last year's?
So the income is actually based the current year,
Okay.
because we're going to order a verification of employment, and we're going to see where you stand with averaging out what you've worked from January to current, and that's how we're going to average out your current income.
So you're going to guess, based on that track record so far, what you're going to make in the year.
That's correct.
So if you're working overtime or getting bonuses early in the year, that is going to affect your overall. So it's not just counting base salary; it's counting everything included. So you've got to be careful not to max out overtime and stuff in the beginning of the year, because it's going to look like you're going to do that the rest of the year, and it could knock you out of the program if it knocks you over the eligibility amount. Okay, well, hopefully this has been great information. I know this is a lot of information on the board, probably hard to read on camera, but if you've got more questions, please reach out and let us know. We'll help you however we can. And Crystal, your direct line?
My direct line is 210-279-8060.
All right, thank you very much. Check out more videos we've got in my video resource library, and let us know how we can help.
Thank you.